Well, it's a very warm good morning to you all here on the 25th of July 2024. The reason I'm dating this is because I will be talking about economic circumstances, and things will change over the course of months and years that this video may well be up. And I am talking to you from our floating home. We are currently in a place called Ambon in Indonesia. But the things that I will be talking about today really impact Australia and Australian businesses. So this talk is all around 5 steps to reclaim and control of your budget in 2024. So obviously, small business has been doing it tough for a little while now, and budgets may have gone a little bit out of whack. Some of the assumptions that you've used haven't come to fruition, and you may be struggling in terms of cash flow and the ability to just run your business like you used to. I'm going to give you just 5 quick steps of how you can take back control of your budget in 2024. So without any further ado, I just want to talk about the current financial landscape of Australia. So we've seen a couple of things that have really impacted small and medium-sized businesses throughout Australia over the past 12 months. We've seen rising prices, which you would have all felt as well from a consumer perspective. So fuel has gone up, energy costs have gone up, and food has gone up particularly. Because of those increasing prices, the Reserve Bank, in its infinite wisdom, have decided to completely eradicate any hope of economic growth by increasing interest rates. Now, they may well have had to do that, I'm not arguing, but they've increased interest rates quite dramatically. I've just done our personal tax returns. When we moved on to our floating home, we had a small apartment in Melbourne, and we've noticed that $5,000 of additional interest has been paid over the past 12 months compared to the previous 12 months. So that's $5,000 that isn't in our pockets anymore that we could spend on discretionary expenditure. Now, all of that has meant, if you were wondering why you were feeling some pain, that consumers have to tighten their belts. I think, realistically, and we don't have a large loan on that property, realistically, that means that as a minimum, consumers throughout Australia have probably lost around about $1,000 a month out of their discretionary spend. Now, that means they're looking to replace that $1,000 by not going on holidays or looking for cheaper goods and services or just not buying goods and services. And all of that has impacted the business to business and business to consumer markets throughout Australia. So you would have been struggling a little bit likely. Now, we've seen things during COVID where some industry sectors were booming and others were not. But we've really seen in this one is sort of going across the board. There are some economic stimuluses that are happening in the construction zone, but we know that construction is doing it tough at the moment as well. And all of that has a knock-on effect throughout the Australian economy, which means that most industries that we see from our clients have been impacted by a slowdown in economic growth, doing things a little bit tougher at the moment. And I really think that is going to be impacting, as the discretionary spend from the business consumer, if you're in that market, dries up, and as that impacts further from those businesses that are doing business to consumer, the business to business consumers as well. And remembering that most of our economy is driven by services in the business to business sector, or it's even those consumers. Some of that, or a fair bit of that, might be considered discretionary. So you are obviously feeling it. I don't have to tell you that. And if you're watching this video, you're sort of thinking, well, yeah, I get that. I just need to know how I can get control of my budget and make things work a little bit better. Now, the pain, if I can really help you understand what's going on now, you're not receiving as much income, which means that your expenditure, and you probably haven't reacted as quick as consumers have, because negative consumer sentiment tends to lead negative actuality in the consumer's pocket. So they've had negative sentiment and they've been easing their spending a lot before they have actually felt that in their bank accounts, but you're feeling it in your bank account now. So you are probably slower to react to cutting costs because you never know when things are going to start up again. And you want to be skilled for them. Finding skilled labour is very, very difficult in Australia. You know that. So when you get skilled people, you don't want to let them go, especially if you're in a services-based business. You don't want to let them go because you know how hard it's going to be to replace them. So you're carrying additional costs, additional burden based on the fact that you're not receiving as much income anymore. So I think that's really the cause of the pain that you're just seeing in your bank accounts right now. Things aren't as easy as they used to be. Okay, so I'm going to talk about step number one. As I said, 5 quick steps here. This is going to be a quick video. Step number one is to assess your current financial situation. So how do you do that? Well, I need you to come to understand what your profit and loss and your balance sheet is currently looking like. Now, I don't expect you to turn into an auditor or to a forensic accountant who's going to be able to go down line by line, but I do expect you as business owners to have a basic grasp of where your accounts are. Now, all I need you to do is have a look at this month compared to last month, this year to date compared to last year to date, from a profit and loss perspective and also from a balance sheet perspective. Now, if you do this, you'll be able to see some highlights where maybe your income has gone down, but your cost of sales has gone up. And hopefully you've got your profit and loss formatted in such a way that you can easily look at that. You might need your bookkeeper or your accountant's help with that sort of formatting or understanding, but you really need to do some sort of comprehensive audit on your numbers. And as I say, that's a bad word, but you really need to drill down. If you say, okay, well, I'm really spending a lot on subscriptions compared to what I was doing last year, then you drill into that subscriptions account and yeah, because I signed up for this and I signed up for this and I signed up for this, but I don't use those things anymore. Can I cancel them? Hopefully you can. And I would encourage you to do that. I also want you to have a look at your percentages. Now, don't switch off. I know this can be a daunting thing at times, but it's really, really simple. If you know your direct costs, and we call them sometimes cost of goods sold or cost of services produced, or if you know what your direct costs are, then you can just look at that line. My direct costs are $100,000, say, and then compare that as a percentage of your total income. So if I earned 500,000 and my direct costs were 100,000, then I know 20% is my direct cost. If you find that is slipping, which is likely in this contracting market because your income is going down, but your costs are going up or staying the same, then that's something that you need to take action on, or at least you can identify. Now, if you don't have all the direct costs nicely marked out in your profit and loss, as I said, you can get your accountant or bookkeeper to help you with formatting your profit and loss so that you can identify those, because now that the tide is going out, it's exposing us as business people if you don't have that kind of information to hand. So really encourage you to do that. And of course, our guys can help you do that as well. But really want you to, or your accountant, whatever you feel comfortable, or you can Google how to do that if you're using Xero or QuickBooks or But it's really easy to format your profit and loss in such a way that you can see your direct costs and your gross margin percentage. You can look at your total profit for the month. Hopefully I'm still making profits as a percentage of your income, and look at that and go, okay, if that has fallen, why has it fallen? Because that's what you're trying to understand. It can't just all be about decreasing sales and increasing costs. It's important to know where those sales have decreased and where those costs have increased. So I do encourage you to drill down a little bit deeper and get a full understanding. It might take you a few hours, but it'll be the best 3 hours that you've ever invested in, because you'll know exactly where to focus your efforts and energies on to help turn the ship around. So really assessing your financial situation is the first step towards controlling your budget and getting back on top of these things. Okay, step number 2 is really to set clear financial goals. Now, things have changed. The goalposts have changed, but I really need you to identify, are you currently going to continue to invest in your business so you're going to accept lower profits and lower cash flow, or based on the fact that you know things are going to turn around and that you want to be in here for the long run, and that you're going to just wear this, you understand that the economy has peaks and troughs, and that you might be heading into a trough at the moment, or you might be in a trough at the moment, and you understand that soon there'll be a peak again. So I'm going to keep the staff on. I'm going to keep renting the factory out. I'm going to keep those vehicles ready to service the customers when they come back. So you're really there for investment. Or otherwise, you might be saying, well, you know what? I can't afford to do that. I really need to cut costs. I need to maintain my profitability. So if you really need to work out what your financial goals are in this period right now. And if they are short term, it's like, well, okay, how can I alleviate things in a short term? How can I spend less in the short term, if that's going to be your pressure, without impacting my long term? So I want to keep my staff members. I don't want to shed any staff, but maybe there's some other things I can do to, because it's only going to be a short-term pain. If it's a long-term pain, and you think, well, I think structurally I need to, still be here, and if things keep going the way they are, I'm not going to be here in 12 months or 2 years. If I don't take some action right now, then you might have to shed some labor, or you might have to reduce the number of vehicles that you've got on, or you might have to reduce your rent. Whatever it is, you might have to take that action now in order to be here in the long term. So just identify what your goals are in a short and long term, and then really work towards those. If you know what you're trying to achieve, I think I love the quote of Alice in Wonderland, where Alice comes up to the cat and says, which way should I go? And he says, well, where do you want to head? And she says, I don't know. And then it says, well, it doesn't matter which way you go then. If you don't have those clear financial goals, then you can take any action, because, you're going to end up where you end up. But if you know where you want to end up from a financial perspective, then you can take the right pathway to help you get there. And it's so powerful being able to set clear and financial goals. Okay, step number 3 of 5. Remember, 3 of 5. So we're doing well from a timing perspective. Create a realistic budget. I mean, things have changed. So if you expected that you were going to get 20% growth because that's what you got year on year on year, and now all of a sudden you're not getting that, you're not seeing that growth, it's time to create a realistic budget. It's time to say, okay, well, maybe my sales won't increase over the next 12 months. So let's dial that back a little bit. Let's see, well, what cost do I actually need? The direct costs of producing my goods or services, or making my sales. What do I need to do in that respect? So you can dial that back as well. And to just creating that realistic budget, again, there's some mistakes that people make when they're doing budgets, is to assume that everything is going to stay the same. So you assume that you need these direct costs in order to make the sales, or maybe you don't. Maybe you can dial that back a little bit. You assume that you need to keep paying people more and more money in order to retain their employment. Maybe you do, but you really need to investigate that. So we have something in accountant alert, whoop, whoop, called zero-based budgeting. And when we do that, we're really saying, we're not going to do a certain percentage of last year. We're going to look at every line individually. Now, yes, it can be laborious. Yes, go and get your accountant or your bookkeeper to help. If you're a client of Financial Fanatics, then we can help you identify what your budget should be based on a line-by-line basis. As long as you know what it is, then you can create a realistic budget. Do you really need to pay $20,000 a month in recurring subscriptions, or do you really need to be paying $10,000 a month in rent? Whatever it is, dive down in that and make an assumption. Rent goes up no matter what, so that's probably a bad example, but because you can program that based on the lease that you've built in, but maybe you can get something else. So create a realistic budget and don't fall for the trap of just increasing everything year on year. Go into that zero base, really look at what's underlying it. Do I need this expense in my business now? So I've also been asked often from clients about what sort of tools and software there might be to help you budget. Now, this is a really hard one, because the reason that it's so hard, and a lot of accountants go, I'm not really sure, and I would as well. There are some very complex and great budgeting software tools out there, but they're very, very difficult to master. They're very difficult to learn. You really need to be a qualified accountant to sort of work them out. Then there are some other tools like Fathom and Spotlight Reporting, which can help you identify where things are at. But again, they're very expensive and complicated. Often, the best place to do it is within your own accounting software. So if you're using Zero's got a great, you can just pull it out into an Excel or a Google sheet. You can look at that line by line, or you can drill into things in Xero using multiple tabs. So I I'm not one of those accountants that recommend that you go and spend money on expensive software. If you've got if your accountant has a suite of management software tools available to them and they are offering that service, then that might be one thing. I know when we did that as Financial Fanatics, offered those sort of services, we had those tools. Our clients didn't really need them. That's probably because the tide was in. Now the tide's going out from an economic perspective. Again, people are now getting to the point where they say, well, can you help? We would help just based on the simple Google Sheets. You don't need to go overly complex. I used to work for a large multinational firm and we only use spreadsheets. It was like, because you just take a little bit of the profit and loss, a little bit of the balance sheet at a time, and then you can just drill down onto that part of the balance sheet. As long as you've got your accounts and your profit and loss organized in such a way that it helps you do that, and that's the real key for me, then you don't really need any other software. As I say, I didn't explain to you the reason why it's so complicated is because businesses are like fingerprints. Everyone is unique, and it's unless you are doing things exactly cookie cutter style as per maybe what the software vendors would want you to do, then it's every business is different. It's really hard, even for AI, to try and work out what that is in the best interest to help you. So that's where I'm thinking with it. Create a realistic budget. Do it yourself to get the top level lines. If you need some help, get your bookkeeper accountant to help you on doing that. Step number 4 is implement and monitor your budget. It is no point doing all this work. You've spent a few hours analyzing your accounts. You've created a realistic budget, even at the higher level, and then you don't do anything with that. You put that in the drawer and you go, okay, now I know where things are at. Like, it is good in some ways because a lot of small and medium-sized businesses run by gut. So you understand that if this machine is not working X percentage, you're not getting this much income every week, your bank account needs to be at a certain level in order to pay these expenses. If you're using something like Profit First, then you'll see that working throughout your accounts. I'm struggling now to pay my suppliers. If that's the case, then just preparing the budget will help you with your gut. But why rely on your gut? And let's face it, we're trying to systemize our business and get other people to help us. You can't do that if you're just running off gut feel. So get that budget and put it into your software system. So Xero is great. QuickBooks and Mob do as well. You can enter those budgets even at the high level, and then you can create something called a variance report. Accountant alert. Variance reports are simply just saying what is my actual for the month or month to date compared to what my budget says, and what's the difference? That's the variance. The difference is a variance, right? So if you're budgeting to get income of $100,000 and you only got 90,000, then you are -10. That's your variance for the month. And how is that going to impact you on the month, on your profit numbers? And how is that going to impact you on your year-to-date budget? So if you're just setting up a report, again, your accountant or your bookkeeper can help you with this to set up a report, a basic management report that shows you what your budget is compared to what your actual is. I think that's a tremendous way to see if things are still on track, not just for you who runs a business on gut, but also for those people that are doing the helping, you're systemizing your business to get you more freedom and more time. So that's what I would totally recommend from that. You've got to monitor that budget. Okay, and number 5 is to really leverage those financial tools and resources. Now, I've explained a little bit about tools. There are things like Fathom and Spotlight that you can get either through your accountant, through your bookkeeper, or you can go direct to those sort of businesses. You can just Google, financial forecasting software. I'm not a big believer of it, though, because I think if you run, even if you just, as I say, it's like a fingerprint, but a fingerprint that changes over time. So if you're going to run your business exactly the same way, year in, year out, and then nothing else is going to change, there's no, you're in a very traditional industry that doesn't change. If you're in one of those, let me know what it is, because in the comments, because I'd love to know what that business that never changes is. If you're going to run it like that, then these software tools can be worth their weight in gold, because they'll really help you understand year on year what's going on. But generally speaking, use a spreadsheet if you need to, or get your accountant and bookkeeper to do it. They're the experts in numbers, and they can really help you understand quickly. Yeah, it could be expensive, You might have to pay an hourly rate to help them crunch your numbers, but isn't 1 hour of an expert's time better than 10 or 15 hours of your time if you don't quite know what you're doing? So would totally recommend looking at doing that from step number 5. Okay, some practical tips and strategies for improving cash flow management, because I think it's really important. Okay, if you don't have Profit First, I highly encourage you to look at a system like Profit First, where you take a percentage of your income and put it into your profit account first. That's where the name comes from, and then the rest for your owners' salaries, your the amount of operating expenses you have. You can carve up a number of bank accounts. More is better than less bank accounts. It doesn't overcomplicate the bookkeeping. It's very simple to flow through, and it doesn't cost the world if you're just hinging savings accounts off your main transactional account. So it's we used to as accountants say use less bank accounts. We don't need to do that anymore. And using more can really help you see where your business is at. So I think Profit First stands for itself, or a system like it. Also, the next thing you want to do is make sure that your accounts receivable, that is people who owe you money, does not blow out, because it's really important that you keep control over who owes you money. And if you can see people are owing you, they're past their terms, ring them up, call them up and say, hey, what's going on? If it's a one-off transaction, then you've got to be thinking about taking deposits on these things. If it's a high value thing, if it's a small thing that you're giving credit on, don't give them credit. So if it's a small one-off transaction, don't give those sort of people credit. If you are, because you're not going to be able to pay your suppliers or your employees, and you have to do that, otherwise they won't show up for work. You need to make sure that you're keeping on top of your receivables. Talk to your suppliers. If you're having problems paying them, talk to them. Just say, excuse me, I need just one more sip of coffee. I'm losing my throat. What you need to do is reach out to your suppliers early and often. Hey, guys, I know I normally pay you on the 15th, but I'm having some problems in some cash flow areas because I've had this customer do this. It might be a week later. Is that okay? If you've reached out to them proactively before it was due, they'll be fine. Same as your customers, if they did to you. You'd be like, okay, I can plan for that. That's no problem. I'm more worried about those people who don't reach out to me that might never be going to pay me. So reach out to your suppliers and just tighten it. Don't pay them on time. Just dial it back a little bit. Again, it's not, you can maintain good supplier relationships if you communicate early and often with them. Another step is work with a good bookkeeper. Now, I know we run a bookkeeping business called Financial Fanatics. I highly recommend it because that's why I built the business, to help small and medium-sized businesses in Australia. If you would like to reach out to me to discuss how we can help with the budgeting process and keeping on top of things, then I highly recommend it. But you can get a bookkeeper to meet with you on a monthly basis. I don't think it's necessary more earlier than that. Talk you through the highlights of the month. Now, yes, you'll pay for it because they need to prepare for it. They're not just crunching numbers, they're preparing for a meeting. So they need, you might have to spend an extra hour or two per month. If you're using something like Financial Fanatics, that's extremely affordable for the information that it's going to give you. Come armed with questions. Do you have a look at and learn from the meeting. Don't just say, I always say this to our clients, you cannot abdicate the responsibility for financial management of your business to your bookkeeper. You are responsible for the financial management of your business, not your bookkeeper, or your accountant. So if you need to know what's going on, you need to use the meetings with your bookkeeper to help you understand your accounts better. And then come armed with questions. I want to see this account. Next month, I'd like us to focus on this. Because if you're just asking for the same information, tell me the highlights of the month. They'll say, well, sales were up by 10%. And you can read that stuff, right? Everyone does it. It's human nature. It's not just our Filipino teams. It's all about human nature, just saying, okay, don't want them to read off something that you can read. You want them to have powerful insights, because our bookkeepers are working across a myriad of industries all throughout Australia. We specialize in Australia and New Zealand, so we're seeing what's impacting you guys. We don't work in the US or Europe, so we just focus on Australasia, New Zealand. So we're really focused on helping you guys get more out of your financial numbers so that you can make more profit. That's why I started the business. So really think that you should do that. Um, Resources for further learning. Like if you haven't read Michael Michalowicz's Profit First, I highly recommend you do that. So definitely work with a good bookkeeper. Have an understanding about Mike. And the reason I'm saying Michael Michalowicz's book, it's an alternative view. It's like you don't need to know accounting or how your accounts look or everything if you're running your business based on bank account or envelope accounting. If you don't know what that means, read Profit First and you'll get an idea. Okay, so finally, I just wanted to thank you all for listening. Hopefully, those 5 steps have helped you. If you want to get a transcript of the audio, you'll probably see that in the blog article or go to our website about exactly what's going on. Of course, AI will summarize it all for us nicely. And also, we use a human copywriter. Shout out to Clea because she's amazing to us to use a human over and above what AI can do from a transcription and an ability for you people to understand, you business people to understand exactly what's going on really quickly. So I really think if you understand your numbers, then you can get on top, get in control of them. I think that's really great. Book a call with me. That's me. I'm Scott Trevethan. I'm the founder and the CEO of Financial Fanatics, and I take every single one of your sales inquiries from my floating home in Indonesia, where we are at the moment on the 25th of July, 2024. I will take your phone call. I'll call you back. You just put in a little form on our website. Book a call, or don't have to book a time. You just say, call me back, and I'll give you a call back when I've got telephone reception and I'm not moving our floating home. And if you want to see more about that, then I encourage you to go to our Facebook or Instagram page, which is Sailing Sea Moon _AUS. If you just Google Sailing Sea Moon, you'll see our posts and you'll be able to see where we are. So do that, and if you're not using us already, then you can do that. If you are using us, then I encourage you to reach out to your bookkeepers and find out how you can have that meeting, how you can add the hours, and you'll be fine. So that is it for today. I hope you enjoyed this quick video. And as I say, get in control of those numbers and you'll feel like you're back in control of your businesses. Good luck, everyone. Thank you.